Let's go ahead and get into the backtesting tool. So when you're on the web platform here under our trading page, so trading at the top, on this left side of our screen is going to be our navigation bar. So this is where we can go to our trade tab, look at our watch lists, trade fixed income, look at news and research. And then in particular today, we're going to be looking at our backtesting tool. So this is the screen that you'll see right in the middle here. This is going to be our backtesting module where we can look and test our option strategies on past historical data. So we have quite a lot of different parameters and functions here to tailor to how you would like to test your trades. But to get started, and even then, we're talking about the backtesting tool in quite some detail today. So we should be able to show you everything you need to know to do this. However, if you want to find any more information on how to use this tool, when you get into this off the bat, these are some nice tutorial videos to check out if you ever want to watch them in the meantime while we're getting our YouTube video up on the recording of today.
And just before we get into it, did just want to say if you're following along today, whether it be on web or desktop, the backtesting tool should look the same on both. So don't worry about downloading desktop or switching over to web. You should be fine staying wherever you're at. You'll still be able to follow along.
Exactly. So it looks exactly the same. The desktop actually pulls the web view from the web platform. So it's a one-to-one, exactly the same. And I see the question came in, does this have the same exact version as the back tester for web? Yes, desktop and the web platform are going to be one-to-one. So it doesn't matter where you are, the backtesting tool is going to be the same. And now when you're getting started with your options backtesting, you're first going to want to navigate to the top here. So right now we have a list of about 200 plus different symbols. These are all very highly liquid traded symbols. So the reason that we're doing this is especially when we're looking at historical options data, we need to find the most liquid symbols so we get the most accurate look at the actual pricing when we're placing these trades. For example, if we're looking at a penny stock or a very thinly traded option on a certain stock or ETF, those wide bid-ask spreads are not necessarily going to give us the best picture on how our actual strategy would perform. Imagine you have a $2 wide spread. Well, then the backtesting tool would look at the mid price. And that's going to be $1 in between or 100 bucks. So there's a big gap there. And, yes, you can test it based on that, but it's not necessarily going to be where you get filled and or be able to close out your positions in the real world or the real trading world here. So that's why a majority of these symbols that you'll find in this drop down here that you can scroll through are some of the most highly traded US options. Common question comes up is, hey, do you have SPX options? Do you have any of those cash settled indices? We do. We have XSP, we have SPX, and a few others as well you can find on this list. But also we have common stocks like Tesla, Shopify, what else we got here? We got Nvidia, or if we scroll at the top here, maybe we'll look at placing a trade on Apple or looking at how our certain strategy would perform on Apple. So we can select there at the top. And then we're going to want to look at our interval. So when it comes to the amount of data that you can backtest, currently you can backtest as far as 13 years. So when it comes to backtesting, personally, I'm not usually backtesting all the way back to 2013. And now the stance on this and the way that I would suggest thinking about this is that you're probably not going to place the same exact strategy for 12 years in a row at the same exact parameters. Markets change, economic events change, it can be political, it can be based on, imagine the meme stock craze. A lot of things can change in the market, and your strategy definitely needs to adapt over time. Someone might implement a strategy for a year or a few years, but I would say about 99% of the people are going to start to make some changes. You start
Yep.
to grow as a trader, learn more, implement new strategies. So going back and testing all the way back to 2013 could garner some nice results if that's what you're looking for on a very long term. But generally, you can look at the past year, 12 months, the past 2 years, 3 years, 5 years, And then if we scroll down a bit too, we can also look at specific events. So you can look at the post-pandemic surge or the panic sell-off. So you can check out some of these black swan events, some of these major events that happened in the past and see how your certain kind of strategy would have been impacted to say, oh, hey, if I was selling puts during the pandemic sell-off, well, probably wouldn't be too great, right? But you would see
Right.
that, hey,
Yep.
if there was another pandemic or there was another giant event, I mean, obviously too, everyone's talking, oh, we're going to war. It doesn't help that we're all over the world right now with some interesting politics, but it is important to see, hey, how do some of these very vitriol or very volatile events impact my strategy? So that's where some of these come in. But for right now, we're just going to look at the past years. So keep it pretty relevant based on the last year's worth of data and trading on Apple. Once you got your symbol and date selected, you're going to want to select your strategy. So these are just some default strategies to make it easier for when you first get into the trade. People commonly ask, hey, can I do custom spreads? Can I do like a 1-to-3 ratio, 1-to-4 ratio, or just do some kind of strange combination that you would like to trade or even just test out? Yes, you can. So I'll show you that in just a second. But if you're doing that, you want to just start with one of these individual legs and build off of it, or you can do one of the commonly traded multi-leg option strategies as well. In this case, we're just going to look at trading a short put. So this is a technically bullish strategy where we're selling an option to receive a credit, and we're looking to benefit off of time decay. We're looking to benefit off of contractions in volatility. And it's generally something, or I would say somewhat of a conservative look of instead of just buying stock outright, people look to sell puts. It's a bit of an alternative for doing that. And we'll see how actually selling a put will compare to allocating that same amount of money in stock. So at the top here, we have our strategy that we can start building. So right now we have the direction where we're going to be selling this put. We can set the amount of quantity of contracts. In this example, we're just going to keep it simple and trade one contract. And then the next part, this is where you can get a little more specific on how you want to test your strategy, is the strike selection. So by default, it's going to set it to deltas. Now, I'd say this is probably one of the most consistent ways to backtest your strategies. One thing you need to think of is that over time, stock prices generally increase, right? Unless a company goes into bankruptcy or something like that. But generally, these stock prices are increasing very rapidly or quite largely over time. And Amazon goes from $100 to maybe $1,000. Now, if you were to set the strike selection based on a certain dollar amount, well, over a long period of time, it's not going to give you the best results of keeping that consistency in your trade. Instead, when we're looking at deltas or pretty much how far out of the money or in the money our strike is, these deltas are going to be consistent based on that kind of probability range. So if we're looking at selling a put and we're at 30 deltas, that's about a 70% probability of profit, or that our trade is going to profit at least $1 before expiration. Conversely, on the long side, it would be 30%. If we go to maybe, what is it, 16 deltas as well, that's right around one standard deviation, or that kind of one standard deviation curve on our bell curve. And then some other things that you can do if we click on this drop down is that we can also select it based on a percentage basis. So we can say, hey, I wanted about 10% from the current price that it's trading at, or 10% from at the money. So you can do a percentage out of the money. You can do a price offset as well. So I mentioned earlier that you can set it based on a certain dollar amount. So hey, currently maybe Apple's trading at, I mean, what is Apple trading at right now? Let's check it out. Apple's trading at
One.
$201. Maybe we want to sell this, maybe we could do it, $20 below or $20 above. So that's how you can do a price offset. Again, when you're looking at a long time frame, if we're going back 3, 5 years, 13 years, deltas are going to be the way to go. If we're looking over the year, we could just do a price offset. And then lastly, too, we do premium here. This is going to set up our trade to the strike price that is closest to the premium that we're setting. So say we wanted to open up trades that have a premium or a credit of about $2 or $200 to open, it's going to find the strike price that's closest to that. If we were to look at 45 days until expiration, so we can also set the closest days until expiration for this strategy. If we were to just take a peek in the options chain really quick, go into the trade tab, closest expiration is probably the 15th here. And we look at selling a put at $2. Maybe change this to deltas. It's going to be around the one standard deviation range. Whereas maybe if we wanted to go around 30, be about $4 or so. So you can kind of look at the current pricing right now to see how you want to base your back test. But that's just one way you can do it. Again, personally, I usually just stick to the deltas. In this case, let's just do 30 deltas. Pretty standard. You're able to collect quite a bit of premium and you're still getting that slightly bullish look. And it's still going to get you a decent amount of profit for the amount of risk that you're putting into the strategy.
Absolutely. Absolutely. Now, just before we move on to the next thing here, Christian, real quick, could you just do me a favor? Why don't we start with a clean slate here? Could you just check the exit condition there for stop loss premium for me? Thank you very much.
Got it.
Okay, so now let's go through our second set of parameters that we'll be setting with the backtesting tool. That will be our entry conditions. So at the top here, we have the very first three. We have every day. Now, this is what this is telling us is that based on the other conditions that we have set below, we're going to try and enter a new trade every day. We can also set our select to have that enter a trade on a specific day of the week. So that's just going to give you, Monday through Friday, if you wanted to enter a trade based off of that. Or finally, we also have the ability to enter a trade on an exact days till expiration match. So like in the example that we have above here, we're using 45 DTE. So every time there's an expiration that comes up, that's 45 DTE, it will look to enter a new trade at that 45 DTE expiration. But for this one, I think we're just going to stick with the everyday entry condition here. This tends to be the one that I'm using most often as well when I'm back testing on my own. So we'll stick with the everyday entry condition for right now. And then let's take a look down below that. Let's limit the number of active trades that we have going at once. So you can set this to any number you would like. Like if you wanted to have a maximum of 10 trades going at one time, you could change that to 10. If you wanted a maximum of 5 trades or 1 trade, then we'll adjust it as such. For this one, we're going to leave this as a limit of 1 trade. So what this is telling us now that we have our entry conditions set is that we will look to enter a new trade every single day, but that new trade will only be entered if we don't already have a position on that we've carried over from the day prior. So what this means now is we'll basically only be selling a put here on Apple once that active trade once that prior active trade was either closed, expired, or assigned.
Yeah, so in general, when you're looking at placing a trade every day, limiting the trades to one day, it's going to look to open up a new trade every day. If you already have one trade open, it's just not going to do anything. So generally, in this case, if we don't set any exit parameters, it's going to go until expiration. And then the day after it expires, it's going to look to open up a new trade at those same exact parameters. And one thing you can set as well, these two settings down here, if we're looking at one trade, we're just going to want to generally have the do not or don't enter a new trade here. So that's just going to make sure that, again, we're just waiting until our option expires or maybe, one of our exit conditions are hit that we'll talk about later. But if you are looking to have multiple trades open, maybe you're kind of scaling into this trade and you have it set to 5 and you want the oldest trade kicked out every single time your certain entry condition is hit, you can do close the oldest trade and enter a new trade. Again, personally, I'm not doing this that often. again, depends on how you want to trade or your personal preferences and on how you are trading options. I would think a majority of people are generally not going to cycle out their oldest trade every time they hit a certain five limit on the amount of trades, right? It's always going to be dependent on, your current profit or loss, risk on it, how close you are to expiration, right? So I'd say for the most part, keeping it simple, we'll keep it at don't enter a new trade. And then the last piece as well here that we'll look at too is that you can set up your trade to enter in when the VIX or just generally the volatility in the market is within a certain range. So we'll just leave this off for right now to keep it simple. But again, it's just another parameter that you can look at adding to further kind of justify your backtest or how well your strategy would perform on certain market conditions.
Absolutely.
And before we run this back test, just really quick, any questions on those steps? Anyone curious? Maybe we didn't do the best job of explaining it. I think we got it covered pretty well, my friend. So nice job. But any quick questions before we go ahead and run this back test, feel free to toss it in the chat. See the question coming in, no rollover options as we near expiration. Um, right now, there isn't any option to roll. Now, the closest you would get to that is doing the place a new trade every day, and it would open one up the next day. But you're not able to close this trade and open up a new one at the same exact time with the back test. And yep, Dolfo, I got you. So the everyday feature again, essentially we have our parameters up here, right? Where we're saying, hey, I want to sell a put closest to 45 days at expiration, closest to the 30 delta strike at one contract. Every single day or every single day at 2:45 p.m. So it's looking at the near the market close when placing these trades. It's going to say, okay, I'm going to look again, look at the options chain for the current day or that past historical data and see if I'm going to place another trade. Now, it would place a new trade or just keep adding on a ton of trades every single day unless you limit it to a certain amount. So if we limit it to one trade, then that first day that we start this back test, it's going to go ahead and open up a position. Now, the following day, our position's still open and we're limited to one trade. However, we're not going to open up a new one the next day, but it's going to keep checking every consecutive day until our current open position has closed, and then it's going to immediately open up another one. Hopefully that makes a little sense there.
And then I see a question here from David regarding the exit criteria. We will be going over those shortly here. We're going to run this back test first just with these entry conditions, and then we'll dive into multi-leg one with some exit conditions set as well.
Exactly. So let's go ahead and run this back test, and I see some more questions. We'll get to them in just a bit. And I see the question here that asking about when these trades are actually executed or looking back on the back test. It's going to be once per day at 2:45. So it's looking at the market data or the options data at the end of the day when placing these trades. So especially too when you're potentially looking to test zero DTE trading, it's not a functionality we're going to have right now because we don't have that granular of data. But in terms of looking back on a much larger time scale, it's just going to be that 1 point each day. But awesome. So now that we've ran our back test, loads up pretty fast, pretty darn fast. At the top here, this is going to be all of the different parameters and the trade that we're placing. And then below that, we're going to get a breakdown on all of the different days throughout the last year that we were placing trades and the performance of our strategy. In particular, we're comparing the performance of our strategy here in orange to just buying and holding Apple or the price of Apple over this time. So we can see here that selling a put on Apple over the last year based on our criteria is actually quite a bit more efficient than just buying Apple stock. I mean, if we look on the chart on Apple, they haven't had necessarily the best year. So it makes sense that, selling some premium was a little more profitable, or actually quite a bit more profitable than just holding the stock. If we scroll down a bit here too, we're going to get a breakdown on our total profit or loss over the last year implementing this strategy. Additionally, next to that as well, we're going to have our max drawdown. So this is indicating how low or the greatest loss that we saw within a certain day while we were holding this strategy. So we can see here on the chart that there is a not too hot day on what was it, April 10th, and that's
Yep.
likely going to be our max drawdown right around April 8th, 2025. So whenever we're looking at our risk tolerance or how much risk we want to put into our strategy, this is a metric we want to look at. And maybe this is where we can look to, turn this into a defined risk spread, turn it into a put spread, because, we don't want to have a $4,000 potential max loss drop down when we're trading this strategy over the year. Next to that as well, we're going to have our return on used capital and the amount of capital that we used. So in this case, when we opened up these trades or had this Apple short put open, took about 5,000 or 4,900 in buying power or capital to keep this position open. Based on our profit here, which is 1,833 over the year, we were able to get about a 37% return on used capital, which is pretty decent, especially for just selling puts. And then next to that as well, this is going to be the MAR ratio. There's a little eye icon. Oops. Drawing tool is messing me up there, but
New
there's a
drawing
little eye
tools.
icon. Yeah, classic Zoom drawing tools, they do me dirty. But this is just going to be an indication of your return on used capital divided by the max drawdown. Generally, if you're looking at trading your strategy, the higher that this ratio is, the better it's going to be for you. Kind of makes sense because we're looking at how much profit can I get based on the amount of capital that I'm using, and then also what is my max risk on this trade. So the higher that this ratio is, the greater the max profit or the profitability you're going to get out of your money and the less risk that you're going to have. Now, there's give and take where maybe your max drawdown is less, but you have the same return on used capital or vice versa. But if you're looking between a range of 0.5 to 1 on the MAR ratio, it's pretty good. If you're getting over 1, very good. If you're going over 2, well then someone better be hiring you soon because that's very good. So if you look at investment firms, hedge funds, stuff like that, they're a lot of the time looking between an MAR ratio of maybe 1.5 to 2 or between 1 and 2. So that's a good metric to look at as you're trying to weigh your potential profits versus the amount of risk you're putting in. But then what's really nice too is that, a lot of the time, especially too, there's a debate between it's like, should you just buy calls or should I hold stock? Should I sell puts or should I just buy the stock? This is bottom section is going to give us a look at what if we had just put $4,900 into Apple stock? Well, in this case, if we did that from the start of the year, we actually would have ended up losing about unrealized gain of $179. Our max drawdown, although about half the amount of our short put, it is because it's leverage, but it is still quite a bit. And that's going to be related to that huge drop down on April 8th. But then also too, we're going to look at our return on used capital and, we ended up with a loss on the year, so it's not great. But in terms of looking at Apple or something that has kind of traded a bit sideways over the last year, and maybe you have a conviction that it's going to continue to do this, or you have another symbol that you think is going to also trade similarly, then maybe trading short puts instead of buying the stock or doing a different strategy is going to be better in those scenarios. So, and this isn't the end all be all tool where it's like, hey, it worked over the last year. It's going to work next year. It's only indicative of past results, but it can help you give some justification to why you might want to implement a strategy based on your conviction of the future. So, as
Yep.
much as we want to predict the future, a lot of the times personally, I'm not too right. But again, it's like, why should I, what's giving me this extra oomph to want to go ahead and implement this strategy or to see how it might perform in the past? So again, great stuff to check out here on this overview, but I'll pass it off to you, Anthony. You want to tell us about the details page at the top here?
Yeah, absolutely. Absolutely. So on the details page here, you'll notice we have a few different bars in the center of our screen. Each of these bars is going to represent each time a new trade was entered. So in this case, for that 1 year timeline, it looks like we entered, how many is that there? Eight total trades over that year. And then you'll see now as Christian's highlighting on each or hovering over each of the bars, it gives us a little bit more information. So we're told when that trade was entered, when it was closed, and then ultimately the total profit or loss for that particular trade. And then underneath the details section there, you see we get some additional information. So we have like our number of trades with profits. And I think I saw somebody here throw in the chat asking if the results include the fees that were paid. So you can see there in the bottom right corner, we're actually given the total amount of fees that we paid as well for all of our trades. And then aside from that, you have some nice averages in that center column there. So we get our average return per trade, the average premium collected, and then also the average overall average profit or loss for all the trades that we took.
Exactly. So a great breakdown on all the kind of individual metrics. Again, you're able to see a little bit granular on your actual profit rate out of all the trades you had, largest individual loss, the amount of buying power used, all that jazz. So it's a good breakdown down here. And before I go on to the next page, I saw the question about looking at the total profit or loss when comparing to buy and holding. That is going to include those dividends that are added into it as well. So it's going to include all that stuff, especially too when we're looking at certain corporate actions on these symbols. The backtest is going to consider those stock splits, those mergers, those transitions as well. And a lot of the times when that does happen, it's going to actually list some notifications at the bottom of your summary page, right down here, about either that stock split or that certain corporate action. It might impact the certain pricing, especially too when you're back testing and you're looking at, especially, we're talking about doing strikes based on delta. If halfway through the year there was a 10-to-1 stock split and you're doing it based on the amount of dollar amount from at the money, then after that stock
Yeah.
split, it's going to get really muddy, right? So that's why the deltas is a bit of a better solution there. But awesome. Okay, so we'll keep going along here. We
Yeah.
can check
Just
out
before
our, yeah, go
we
ahead.
get into I was gonna say the logs here. We've got a nice question from Scott, asking about how assignments handled on the backtesting tool here. Or is it assuming exit before assignment? So it does not assume exit before assignment. It will actually reflect any exercise or assignment that occurs, and you could see that here in the logs that Christian's about to go over.
Exactly. So great question to ask, and we'll show you in just a little bit how you can actually set that up within the exit parameters on the backtest when we start a new backtest here in just a second. But in our logs page, this is where we're going to find a bunch more data on the trades we placed. Again, we had 8 trades. We can see when they were open and closed, the amount of premium. This is also considering adding in commissions and fees too on top of the trade. So it's considered into your return on investment. And then as well too, we're going to see the result of our trade too. If our trade expired out of the money, we ended up, with a max profit on the trade, or did it end up getting exercised? And also too, when it is exercised or assigned in this case, it's also going to include the transactions of closing the assigned stock. So if we go to our next page here under orders, we're going to start to see some of those transactions where right here we can see where we had to close some stock here, or also right here. So these are going to be the 3 times that we ended up getting assigned. It looks like on the first 3 trades, actually, or the last three
Last,
trades, we actually
yeah.
ended up getting assigned. So, and that kind of makes sense too, based on if you look at the graph on Apple over the last year, there was a bit of a big old crash. So, ended up getting in the money on those options. So, it's considering the exercise and assignment. And then one thing too is that if you're ever curious, like, hey, what strike price is it actually selecting and or what expiration? in the orders section here, you're going to be able to see, okay, hey, the trade's replacing 46 days until expiration, 39 days until expiration, 220, 210. Again, the price of Apple's moving around, so it's all relative. But you can see based on our parameters on entry, where it's getting close to that 45 days until expiration, or where on average our trades are being set up. And then lastly, or the last two here, is we're going to have the transactions section. And this is just another detailed look at the trades that were placed on an individual basis. And then two, we can go to daily settlement. And this is going to look at our profit or loss, our current net liquidity, our return on investment, the drawdown, and the amount of time that has actually passed through the back test. So this is kind of giving us a look at every single day throughout the last year, what was happening in our portfolio. So now you're not going to get necessarily a graphical view of this screen here, but what's very nice is that all of these different logs can be downloaded. So if you want to do some of your own analysis within Excel or whatever spreadsheet program you're using, that is available. And two, when we're looking at certain backtests, sometimes there's some weird scenarios that we don't necessarily want included in the backtest. Now, you could consider it cherry picking, but again, if we're looking to kind of backtest our strategy based on what we think might happen in the future to see if it justifies doing that strategy, then maybe we don't want that wonky day or, something crazy might have happened. You just want to take that up. Or there's a trade in there that you're like, I wouldn't have placed that trade, but a majority of the other ones I would. You can download that spreadsheet, exclude it, and do a little summary on the results there, not including those strategies. But awesome. So that's, again, just a very large overlook on our backtesting tool. We're going to go back and talk about exit conditions and stuff. But again, I'm just going to pause for a second and look at some of the questions here. Did you see anything, Anthony,
I
that
guess
we...
pretty common one that comes up. Somebody was asking about testing zero DTE on here. Correct me if I'm wrong here, Christian, but I don't think it's going to be possible at this time. Is it just because of the entry once per day at 2:45 p.m.?
Yeah, exactly. So it's a limitation on the data that we are pulling in on this. We don't have that minute data on the end of the day that would give you an accurate depiction of trading zero DTE or being able to close the position at the end of the day, especially too when we're looking at the last 15 minutes before the market closes. There's a lot of, a lot of different things going on that the backtesting tool wouldn't be able to necessarily include. So, yes, you could do it to some extent, but you're not going to get a clear picture of what would actually happen. So
Right.
it's something that we are looking into to see if we can add in the future. But for right now, if you're looking to backtest zero DTE, it's not something that you're going to want to do on this tool.
Awesome. I think Ben looks like he's crushing it so far in chats and Q&A. So I think we should be able to move on to the to placing a multi-leg trying a multi-leg strategy here with a few exit conditions.
Yep, exactly.
So if you
Awesome.
could just navigate there to new back test for me, please,
Yeah.
my friend.
Or here, one second. I'm just going to show that really too. So,
Yep.
we had this back test that we just had right here. If you ever want to go back and do a new back test and or make some adjustments to this back test, maybe you want to change just one parameter and run it again, all you got to do is just tap on the new back test button in the top right. And then I'll hand it off to you, my friend.
Perfect. Perfect. Yep. So we're actually going to, I don't know if any of you are familiar with our back testing tool or have tried it maybe prior to this demo. But with over the last few days here, you might have noticed a newer feature here. So this is going to this blue icon here off to the right side of the page. It's actually going to allow us to link one leg to another. Now, this can be very, very useful when it comes to trading multi-leg spreads. So why don't we go ahead and add another leg there, Christian? Go ahead and click that blue button for me, and this will populate another leg underneath what is already displayed there. This new leg, because we clicked on that blue icon, will be linked to our original trade that we had listed there. So with this linked leg here, why don't we go ahead and turn this into a credit spread? So we'll go ahead and buy the put on this linked leg here. And then let's take a look at the strike selections now. So we can offset our strikes based on a certain dollar amount here. Right now, we're offsetting it by $10. You could do an approximate offset here. So I guess that would more so be useful, like if there's strikes that are in like 50-cent increments, or if there's some sort of like special dividend, maybe that's when you may look to use more of an approximate link there. You can link it exactly, or you can base it off of a percentage of out of the money from the linked leg. But for this one, I think we're just going to go ahead and keep the offset there from the linked leg as exact. So with this one, we will want to do, we'll make that a -10 since we're going to be doing a credit spread here. If we were testing a debit spread, we would just leave that as a +10. And now that we've got our link leg established, let's go ahead and take a look at some of the exit conditions here. So the first and foremost, we can elect to have an exit on this trade at a specific day until expiration. So maybe you wanted to exit, we're testing the 45 DTE, maybe you wanted to exit at 21 days until expiration or 30 days until expiration. That is when you would select that first condition there. Underneath that, we have the ability to exit after a certain number of days in the trade. So again, pretty self-explanatory there. If we're in the 45 DTE, maybe we want to exit after 15 days. We could check that and set it as such. Or maybe we were interested in setting up some stop losses or take profits, so similar to like a bracket order, or maybe you just wanted to go for full profit on the credit spread here and you only wanted to set a stop loss at a percentage of the premium. So with this one here, why don't we go ahead and, yep, thank you very much. We'll keep that stop loss at percentage premium selected, and we'll go ahead and keep that at 40%, but you could really adjust it to whatever you would like. And this is also a great tool to kind of figure out if you're new to stops and testing them out yourself. What works best for you? Is it maybe a 20% stop loss, 50% stop loss? But for this one, we're going to go ahead and leave it at 40%. And then finally there, similar to the entry condition, we can also use the VIX as a reference here. So we'll exit a trade or exit trades and then not enter any trades if the VIX is above a certain amount. So if we were to check that, you'll see that we're able to set like a minimum amount there, or minimum value for the VIX.
Exactly. Let's go ahead and run it. Let's give it a look. Let's see what so right
Let's
here,
do it.
we're kind of making our strategy defined risk. We'll probably look at maybe a little bit better return on capital. Probably a lot less of a max drawdown compared to what we had before. But
Yep.
again, we're going to see our chart here. Tracks
So
actually quite a bit better, but here, I'll let you break it down.
yeah, I was gonna say on this one, I mean, we did make it define risk a lot less capital that we're using to place a trade like this. And it does look like that total profit and loss on our define risk strategy. Looks like we come out profitable here. What about the buy and hold? What's that in comparison? Okay, so looks like over the last year, I mean, this sell and put credit spreads here on Apple did wind up being a little bit better than buying and holding the stock.
Exactly. So, we saw some larger outperformance by just selling the put.
Yep.
but there was a much larger risk. That max drawdown was about $4,000 at one point, whereas in this case, we're only seeing a max drawdown of about 1,000. Now, still a decently big max drawdown here, but and quite a bit less profit. Not as good of return on capital, but we are being a little more defined risk here. So now, does this indicate that selling a put spread was necessarily better? Maybe not. Maybe selling a put would be better, but this is also based on some conditions that fit selling a short put pretty nicely. Now, if we were to see, a different scenario where the market really did not go in our favor for a longer period of time, this might have been a better strategy now. So over the last year, not as bad. Again, it just all depends on your outlook or how long you're looking to implement a certain strategy. So, yep, this is definitely, again, I would say based on this, it'd kind of back me up to sell some short puts instead, which
Yeah.
I do.
I
But
was gonna say, I mean, with that, I mean, if you we only made our spread $10 wide, I would imagine maybe if we made that spread a little bit wider, we might see a little bit larger total profit, just because we're collecting more premium. But yeah, why don't we go ahead and test it out, see if I'm right or I'm wrong, completely wrong.
yeah, it didn't work as well. So, I mean, what if we made it a little, what if we did a $5 wide spread? We go back here, do -5 instead. Okay, not as
38 bucks.
bad,
Okay, still
but honestly,
profitable.
it looks like maybe $10 wide was kind of the pocket. So this is the same thing, especially too, whenever I'm in this tool, it's just kind of constantly going back and forth and making little tweaks, seeing what works, comparing how different adjustments to your strategy might change the specific outcomes based on this past data. And one thing you can do as well that I wanted to show off is that you can also change some of the exit conditions. So someone was asking about, hey, maybe if we go back to just that short put again, real quickly, and we want to make sure that we're closing out our option before it expires, so we're not getting exercised or assigned, you can set the exit at specific DTE to just 1 day. So it's going to close it the day before expiration. And if we run this back test again, maybe let's change stop loss wasn't not doing
Take
us any
that. Yeah.
justice. Yeah. Hmm. Interesting. Interesting. Well, it looks like in this case, we actually probably should just hold it till expiration if we want to end up getting a profit on this trade. But if you were to go to the logs here, you'd see that here that we didn't end up getting exercised or assigned. So that's how you can kind of work around the exercise and assignment
And we
when
did
doing
have
a back
a
test.
question here from Abdi, I think that we missed. He was asking if we can only compare the strategy to the buy and hold of long shares, or do we have the ability to compare it versus another option strategy right now on the back testing tool?
It's a great question. So, as of right now, we are limited to just being able to compare the option strategy that you're testing right away to the buy and hold. Now, the best way I would say that you could be able to do this on a slightly larger scale comparing the option strategies would to be to download the data and make some of this in an Excel spreadsheet. Now, this is functionality that we are looking to improve and build out in the app to easily compare multiple option strategies, especially to maybe, again, have a graph of four different iterations of selling a put, maybe changing the days until expiration, maybe tweaking the deltas, and comparing all of those to the buy and hold, all on top of each other. So it's something that we are looking at adding in. But for right now, the closest you're going to get is going to be to download the data yourself, or also to potentially taking a screenshot of the results and then doing a little bit of a comparison there. I do that from time to time as well, or just kind of flicking back and forth and checking it off just based on a mental basis. But that is something that's been requested a lot, and we're going to look to add it soon. And let's see, any other questions coming in?
It looks like Abdi actually came in with another one here regarding the credit spread. Can you set it to where you only enter a credit spread when vol skew is favorable? So sell high vol and buy low vol.
As of right
Or
now, no.
you have the
But
ability to now.
these are all things that one of the fellows that helped us create this tool, if you're a fan of Tasty Live, it's named Dr. Data. So
Yeah.
this is something that was kind of his passion project, and I was just talking to him earlier, and there's a lot of really cool stuff that he's looking at adding. One of those things he did kind of slightly mention, they have a lot of different studies are looking at vol skew on the Tasty Live side. So these are all things that we do want to get into the back testing tool here, really improve it, add a bunch of functionality. Just for example, a couple days ago or pretty much last night is when we added in the ability
Yep.
to link legs and change the, say like, oh, hey, I want to do it, $10 wide or do $10 wide condors or something like that. So to a point, or to honestly, you can add in stock as well. And then two, I think a few weeks ago we added in the ability to test based on certain VIX ranges. So it's a little more basic than what you're looking for here, but these are all feedback that we had from customers using this tool. So one thing you can do is shoot us an email at feedback@tastytrade.com. We'll show you our contact information in just a bit at the end of the demo here, but that's where you can let us know what you want to get added, and we will work on it. So thank you for asking about it. But let's see
Absolutely.
what else we got going on here. And I see someone asking, can you do take profits? So yes. So if you wanted to do, again, maybe we'll do that short put. We want to set a 50% take profit point. We could set it right here, run our back test and see how that performs. So again, not necessarily the best here. And let me just do a little refresh. Yeah, surprisingly, it's the same
Yep.
exact results as before. For a second, I was like, "Wait, is my computer buggy?" It's like, no, it's honestly just same results as before. But okie dokie. Any other questions before we go on to some of the other stuff?
Here's a
Looking
good one
here.
from Rodolfo that just came through. If you want to convert the put credit spread into a condor, would you click the blue button or simply add another leg? So with that, now, yeah, we'll have to go back to new backtest. First, what I would like to, or how I would do it at least, is I would actually link the long leg here for the put first, and then maybe go ahead and,
Or oops.
so if we, yeah,
So
link it
yeah,
first.
I'm all over the place. Sorry, I'm misclicking.
You're
It's
good.
the end of the day. My brain's not working. But okay, so first thing is that you have your short leg, right? You click
Yep.
on the link to add on another leg, and you buy
Perfect.
that put. You can do
Yep.
that $10 price offset. And then you can go add another leg, sell your call, and then click on the link on the right here, buy that call.
Buy the
And
call.
then you'll see here that, oops, that our long legs, these two are linked to our short legs. And that's
To
where
the
you can
short
kind of say like,
legs.
hey, I want, you know, $10 wide iron condors to test. That's the best way you do it. Now, conversely, you can, if you're not looking to link the legs, which I assume you're looking to, yeah, you're looking to link the long legs. But if you do just want to, go back and click on select a different strategy, start here and do the old short iron condor, you can do that as well. But again, you're not able to link them directly. I mean, you could go in here, just delete these two legs, click link on those two, change it around. But I think that first method is going to be a little bit faster. Again, we're going to work on the functionality to be able to, click on the strategy here right away. click on this and then be able to link after, but this is just a day one iteration of being able to link the legs. And I saw another question, can the backtest reflect roles? So right now it does not include roles, something that we are trying to look into, but as of right now, it's only going to just be closing a position on one day and reopening a position on another day. I mean, you could kind of get there with the close the oldest trade, enter a new trade when you have multiple trades, but it's not necessarily it's not really what you're looking for there. But yeah, again, it's something that we're looking at, but right now it's just closing a trade, reopening it. I mean, it's similar. There's going to be the slippage there between the days, obviously, but that's as close as you can get with the backtesting
Yep.
tool. No problem. Okay, so we're going a little long here. I just wanted to show off a couple, just two more things really quickly, and then we're gonna have to call it a day. But if you are looking to do a little bit of risk analysis on your portfolio, you can go into our positions tab here at the top, and let me pull up accounts. Show this guy. Much better. So when we're in our positions tab, some things that we can consider here, and let me just also, oh, it's going to hide our beta weighted deltas. Crumb. But in short, again, I'll just keep it simple. There's delta and theta here at the top. This is looking at your overall portfolio delta. And one thing you can look at is to see how weighted you are on the bullish or bearish side based on beta weighted deltas. Essentially, it's going to look at all your positions and compare if, say, SPY by default, so you see beta weighted deltas right here. If SPY were to go up $1, how much would my portfolio profit? If it were to go down $1, how much would I be at a loss? So if you're looking to get delta neutral or looking to kind of hedge larger market moves, beta weighted delta is a really nice thing to look at. And then lastly, too, there's this little P&L icon. So if you haven't seen this before, it's super, super nice. But in terms of beta weighted delta, if you were to click on this icon right here on the positions tab, this is going to show you a graphical representation of comparing your entire portfolio to the price of SPY. So we can see here that on our x-axis is the price of SPY, and on the y-axis is our profit and loss on all of our different positions. In this case, we are quite bearish skewed to SPY right now. So if SPY were to go up in price, portfolio is not looking too hot. If it were to go down in price, quite a bit more, probably around, even past the one standard deviation point. So these are the first standard deviation, two standard deviations. We're going to need a big bearish move. So this is a
Yep.
bit of a short portfolio at the moment, or some of these trades just aren't doing good in general. But this is a nice graphical view to be able to see the overall risk on your portfolio, looking at a larger market look. Last thing too, again, we're pressed for time, and this would take a lot of time to go over, but we do have past demos as well as a tutorial on our help center. But if you go into our capital requirements window, this is where you can see the margin requirements, buying power usage, maintenance requirements for all of your open options and futures positions. If we were to check on total here at the top, so we check to make sure that all of our positions are selected, and then we go into the risk analysis tool. This is mostly used for portfolio margin. Again, we're getting in the weeds of it. It's going to start to get confusing here. But if you are looking to get a deeper dive, a little bit more of an advanced look at your overall portfolio risk, this is where you can see in these risk arrays, we're looking at larger market moves on a, down move, so 8% to down to 20%, or up also. I think we're getting a little scrunched here on the side. Let's see if we can make some more space.
There we go.
But this is where you can also see how larger market moves will impact your overall total portfolio and where your max risk might be. Where in this case, again, if
To the upside.
the price of SPY and generally the market goes down, we're looking at more of a profit. If it goes up, we're going to be at a loss. Again, it's just based on this portfolio. But Got a nice Help Center article. If you look up the risk analysis tool on our Help Center, I can show you that in just a second too. But nice tool to check out there. That's made directly from our margins team. They look at it a lot when determining overall portfolio risk as well. But to wrap things up here, anything else you want to say, Anthony, while I pull up our contact info?
Let me see here. I think you did a pretty nice job of covering it. I mean, I know we spent a lot of the demo on doing the back test or showing off the backtesting tool, which don't get me wrong, great tool. So if you're interested in using that, definitely check that out. But I think another important point you brought up there at the end was the beta weighted deltas for your overall portfolio. That's really, really something that's very important to understand. So if if you aren't familiar with it, I would definitely say check that out and try to learn a little bit more about beta weighted deltas there at the top of the platform.
If we pull up our help center here, this is support.tastytrade.com. We have some nice materials on beta weighted delta, describes what it is, how you can add it into your portfolio. I mentioned the risk analysis tool. If we search that up in our search bar here, portfolio risk analysis tool, this is going to give you a larger breakdown. There's quite a bit of information here, breaking down all these different adjustments, what these different metrics mean, how you can adjust it, look at certain expiration risks, stuff like that. So again, it could probably take up another hour's worth of our time to get into these details on this, but definitely take it a peek. And then if you're looking into these tools and you need any further help or have any specific questions as well, you can always contact us at any time via phone or email. So if you go to our main website or our help center at the very bottom here too, you can find our contact us link. You can also type in contact information in the search bar. You'll find this article. And this is where you can find our phone numbers. So if you're in the US, use this guy. If you're calling internationally or outside the US, use the 312 number. And then if you're looking to chat in, especially too, if you have a bit of a language barrier or you can't necessarily you're not great at speaking English, but you can type it. Or even then, if you're chatting in with Spanish, we do have some translation. But you can go to our chat here and go through some of these options, and you'll be routed to one of our chat support representatives. So I know Anthony is the master of that domain at the moment. But lastly, too, if you do want to send us an email, I mentioned our feedback email. If you're like, hey, I really want to get this added to the backtesting tool, or even then, common question. Can we get trailing stop losses? Please email in more. Our devs will make it. Just keep telling us. Keep
They'll
telling us.
listen
They
to
need
you.
more justification. Every single day I'm telling these guys, and it's like just get trailing stop losses, get conditional orders. So the more feedback we get, the more justification we have to put our resources into making some of these changes. So please reach out, send us what you like, send us what you don't like, and we'll definitely look to make some changes. And then lastly, too, our mailing address if you want to send us something nice. I always make the joke, no anthrax, please, of course. Don't want another scare. But awesome. Well, thank you everyone for attending. Anthony,
Yep.
you're a beast as always. I appreciate you for joining us. And Ben, I know you're putting in the work there. I saw you typing away like a madman. So big shout out to Ben. Thank you, my friend. And thank you all for attending. We have a
Hey,
recording. We're going to post it to our YouTube channel. Otherwise, I hope you all have a fantastic rest of the week.